Hello everyone, welcome to another episode of HealthTech with Purpose. Today we have Michael Cardamone joining us on our show. Michael is the CEO and managing partner of Forum Ventures, a B2B SaaS-focused seed fund, pre-seed accelerator program and community. Join us on this exciting episode where Mike talks about early stage health tech investment, emphasizing deep market understanding, regulatory knowledge, and early signs of market pull as critical factors for success in healthcare startups.
Hi, Mike. How are you today? Welcome to the
I'm
podcast.
good. Thank you. Thanks for having me. Doing well. How are you?
Great. I'm doing perfectly great as well, and very excited about how things are going on in health. So it's exciting day every day. No,
Yes.
no regrets that way. So great. Good to be connected, Mike, for this podcast. And we really wanted to know more on what's going in the VC circles for health currently. But before we get into that, how about we do a quick introduction? So over to you to introduce yourself and talk a bit more about Forum Ventures and what you guys are up to and so on.
Yeah, sounds good. I appreciate it. Yeah, the quick background is I'm in the New York area now, but I spent 9 years in San Francisco. Was early at Box, and then was at another startup in the education tech space, actually. We grew to about 24 million in revenue. And then we just hit 10 years. So I started this in May of 2014, initially as a B2B focused accelerator. And so, we were kind of first check-in, founding team, very early with an initial fund in 2014. Fast forward now 10 years, we're 32 people full-time. We've got three parts to the business. We still run the accelerator. We invest in about 80 to 85 companies a year through the accelerator. We have a pre-seed fund, which does about half of the investments we do out of that fund are follow-on investments in our own accelerator companies, and half are outside the accelerator. And then we also have a venture studio. So 11 of the 32 people are focused on just building companies from scratch, and then pulling in kind of co-founder CEOs to help build those businesses with us. And so those are the three parts of the business. And while we're broadly focused on B2B, health tech is a pretty big vertical for us. My wife actually pre-COVID went back to school to become a nurse, and so in talking to her and learning more about the industry, I started leaning into it. And then obviously COVID changed a lot of things and created a lot of opportunities, and so it's an area we've been like leaning into a lot more over the last 4 or 5 years. And has become kind of a key vertical for us within our overall thesis. And so we've done quite a bit of health tech investing at the very early stages over the last 4 or 5 years.
Great. So any interesting stories coming from these investment, if you want to name or talk about a few of the companies that you have been part of through investments?
Yeah, I mean, we've invested in 500 plus companies over the years, just given the volume of companies through the accelerator. So we've had a lot of early successes outside of health tech before it became kind of a key vertical. And then within health tech more recently, we're in a company called Remo Health, which is kind of, building a lot of tech-enabled service around dementia care and is doing really well. We're in a company called Finni Health, which is kind of helping practitioners build out their own private practices around ABA therapy, and they're growing very quickly. General Catalyst is also an investor in that company, and so we've been in a bunch of companies around health tech, but those are a couple just to name them.
Great. So, can you tell us more about the size of the investment that you look at? Is it typically early stage or you do late stages as well? And what is your investment thesis, if you can share more about that?
Yeah. So like I said, we have three ways we can work with and engage and invest in founders. So the venture studio, we start the companies from scratch. We're coming up with ideas. We're bringing CEOs in. And then once we do a lot of validation and work in tandem with the CEO to iterate on the idea and validate the idea and line up early customers, we then form the company and put 250K on the balance sheet initially. so that they can kind of hit the ground running with some capital on the balance sheet. In the accelerator, that's where we do about 80 to 85 investments a year. And our standard accelerator terms are 100K for 7.5%. So pretty typical kind of accelerator terms. Every company that comes in gets 100K. It's typically a founding team, some early version of a product. They may or may not have customers yet, but we're typically the first check-in or very early capital in. And then we work very hands-on with them to help them with like go-to-market and fundraising and making sure they're going after the right ideal customer profile and just like really in the weeds with them on tactical kind of go-to-market strategy, especially. And then the pre-seed fund, we're currently investing out of our second fund, and check sizes have ranged anywhere from 250K to 750K out of that fund. So in that fund, we're typically investing in like a $1 to $2 million round, and we're either the largest or second largest check in the round in most cases.
Okay.
And so those are often kind of pre-seed deals or small seed deals. They usually have some early traction, but not always. Depends on kind of the market and the founder. But that's at a high level, the kind of check sizes and strategies across all three.
Great. Okay. So, a follow-up question, moving further is, so how is the environment of investment currently, given that there has already been a lot of news? So, are things picking up? Do you see any particular patterns that you can share, especially in terms of investments? How do you see?
Yeah. Yeah, so we're in a pretty unique position just given the volume of companies we have in through the accelerator to see early signals at least the early stages and even some of the later stages. I don't have data on it yet, but it feels to me like things are starting to pick up. We have 10 years of data of like follow-on funding rates out of the accelerator and like how many meetings it takes to get a round done, how long it takes to get a round done, and that was, that data in 22 and 23 were kind of lower than historical averages, and we're starting to trend back up to historical averages that we've seen over 10 years. So it feels a little bit like pre-seed and seed is starting to open up a bit. We're obviously not anywhere near, nor should we be, the craziness of 2020 and 2021. But I think we're getting back to like a normal, like 2018, 2019 timeframe in early stage. I think Series A is starting to open up a bit, but the bar is certainly higher than it has been in the past. And then I think B and later is still pretty challenging. Rounds are getting done, but in a much smaller subset of companies. And then those rounds tend to be very big and competitive. But the bar and growth rate to get those like B rounds done is pretty high right now.
Okay. So for VCs, like because most of the news that we read or come across is more from the point of view of a founder, like, how is the environment for them? So for VC, how is the environment like both on raising capital as well as, investment opportunities?
Yeah, it's LPs are, it was really hard to raise capital as a fund in 22 and 23. It feels like right now LPs are at least taking more meetings. I think you saw a number of different factors that led to kind of like a flight to safety from LPs, which meant like more capital in a smaller subset of brand name funds because that's kind of viewed as safety. It's like the old adage of you don't get fired for, buying IBM, like you don't get fired for investing in Kleiner or Sequoia or whatever, right? So I think you saw a pullback from emerging managers and smaller funds, and I think LPs are starting to lean back into that, but cautiously. So it's still hard to raise capital, and I think you'll see a lot of funds that popped up in 2021 and 2020 struggle to raise second funds. But I do think it's starting to open up a bit more, and LPs are starting to add new managers again in that like emerging manager, smaller fund category. It's just not as frantic of a pace as anywhere near frantic of a pace as it was in 21.
Probably that was a outlier and spoiled us
Yeah.
in
Yes.
expectations.
Yeah.
Okay.
Yeah.
So Mike, there has been a lot of talk about AI, and of course, it has been exciting for both
Yeah.
hospital systems, like a CIO as well as a VC, like the possibilities that exist. And, especially VC investment is all about, counting on the future opportunities and future outlook. So,
Yeah.
how do you see, in your opinion, the evolution of AI, and what are the real use cases or substantial progress that you are seeing around AI?
Yeah. Yeah, I mean, so the obvious ones, which we can skip over, are obviously there's a lot happening around diagnostics and treatment around AI. I think outside of those areas, I think there's one is like early detection. So I think we're seeing a lot of people trying to leverage like new modalities to have early detection. So, just listening to like someone talking and trying to detect early signs of like, are they at risk of stroke, or are there things you can do to do early detection around like potential cardiac issues down the road, where you can then leverage AI to have much better preventative opportunities within healthcare, as opposed to just waiting for there to be an issue and then using AI to diagnose the issue. And so I'm excited about a lot of the like early detection
Mhm.
stuff to see if there's ways to like biomarkers or ways to detect, someone trending negatively from a health perspective early enough where you can catch it and do something about it before it becomes a major issue. And then I think on the financial side of, health systems have been, since COVID, have struggled a bit financially. Margins have gotten tighter. And so I think a lot of them are looking at solutions that can help drive costs down or incremental new revenue, but in a lot of cases drive costs down on the operating side and back office side. So things around like, how do you handle claims and pre-authorization and all that kind of stuff, and like minimizing a lot of the back and forth and the need for call centers and billing, and trying to like streamline and automate a lot of that stuff. And then even operationally within the health system, like, are there things you can do around like fall detection or input of data automatically versus like having the nurses have to input it every time to save them time. So I think there's a lot of areas within the operations of health systems that AI can have a pretty big impact on driving costs down over time.
Great. So, but is it a crowded market? Like, do you see that this is like a substantial wave already, or do you see that this is like that early wave that may, go through a Gartner hype cycle kind of thing? So go low back, and then, few winners would emerge. Like, how do you see it as a VC?
Yeah, I mean, I think we're the obvious opportunities are becoming crowded quickly, but it's unclear who the winners are going to be still, because I think a lot of them are still early enough, that and like sales cycles are long.
This episode of HealthTech with Purpose podcast is brought to you by MindBowser, a product engineering and digital transformation company focused on health. At MindBowser, we enable health companies to build the future of health where accessible, equitable, and patient care.
We strongly believe that technology can empower a healthier world, and that's why we are partnering with healthcare experts like yours to make it happen.
Hi guys, thanks for listening to HealthTech with Purpose. Make sure to subscribe us on Spotify, Apple, and YouTube for more expert insights on industry innovation and transformation. And remember, share the knowledge.
Especially if you're selling into health systems, that it's, I think it doesn't have the dynamic of like winner take all. I think, once you get into a health system, it's going to be really sticky. It takes a while to get into them. And so I think there will be multiple winners across a lot of these categories. And it's a big enough, market that it can certainly, support multiple big outcomes, venture scale outcomes in a lot of these areas. So I think I think it's like starting to become crowded, but still plenty of opportunity to kind of find and invest in winners.
Mhm. Great. So, Mike, another interesting thing that is always on any health founder's mind is, how do they become fundable or successful, of course. So, like since through the various programs that you've done, like from Accelerator to Venture Studio
Yeah.
to VC. So, what are those common themes, if you have any, that you can share, like a checklist or like a things to do for a health founder if they were to start today?
Yeah. I mean, this is maybe obvious, but I think having deep understanding of the market and problem you're trying to solve and the nuances within that is like really important in almost anything you're building, but healthcare, I think, especially. And so that could be like you've spent a lot of time in healthcare and in health tech companies or at health systems, and you have like a deep understanding firsthand from working there. It could be firsthand experience personally. You went through a health crisis or someone in your family did, and you like had to navigate it on the personal front, or you're just absolutely relentless about customer discovery and you talk to tons of people and like really deeply understand the problem space you're going after before you go after it. So that's one, is like how much knowledge and unique insights do the founders have around the problem they're going after, and how did they earn that knowledge? I think is one thing we look for. And then on the other side of it is more around like what are the early signs of pull from the market? So, selling into health systems is not the only way to sell into healthcare. Obviously, there's a lot of models, but is there a strong pull? Even if the sales cycles are really long, are you getting health systems interested in being design partners? Are they interested in investing? Are they trying to like figure out how to get involved even at the really early stage? And even though it may take 6-12 months to actually get to like a full annual contract, you can start to sense like how serious they are about the problem space and about this team and what you're building and how you're building it. And so that's one way. If you're selling, like in Finni Health's example, that was more of working with like spinning up private practices with practitioners, and there was like clear early pull and a mismatch in supply and demand. So like there are a lot of market dynamics that were in their favor. Remo Health has a lot of like market tailwinds around it, obviously, with like the baby boomers growing older and dementia being such a big problem. And most of the caretakers for people with dementia are not professionals. They're just family members that are caretakers. And so helping them and empowering them to, provide better care, provide more transparency back to the health systems we felt like was like a really important piece of dementia care, that we thought there was a big opportunity there. So I think a lot of it is just like understanding the market dynamics, understanding like regulatory shifts that might create an opportunity or new codes that come out that may create an opportunity. And then figuring out like, is there good kind of tailwinds in the market and good pull from the market from customers, early, which is always hard to tell early. And I think health systems like notoriously engage with a lot of early stage companies, and then it's actually like pretty hard to get to that annual contract. And so like really digging into like, how important is this? What does the engagement look like with the people who are testing it in the beta phase? And just trying to kind of figure that out. It's hard at the early stages though.
Right, right. In fact, I always say that, building a health startup is, 10 times more tougher than building, say, a e-commerce startup or any other
Yeah.
startup, because, like it's not just
Yeah, every industry has its challenges, but
yeah,
healthcare is certainly one of the
many
harder
moving
industries to
parts.
build.
Yeah.
Yeah. Yes.
And even an MVP may not be just quickly, say, setting up a web page or something. You still have to, in most cases, like integrate or manage PHI or be compliant.
Yeah. Yeah,
So
there's extra compliance hurdles to be HIPAA compliant, and depending on what you're doing. And And then even just, we see a lot of things that are technology to augment care or improve care, improve outcomes.
Mhm.
And part of it is like, okay, how long is it going to take to prove the efficacy of what you're doing? And like, how clear will it be that your solution is the thing that improved it? Because if you can't prove that over some like reasonable amount of time, it's gonna be really hard to convince health systems to pay for it. And so that's another big piece that health tech founders need to really think through is like, okay, it sounds intuitively, it sounds like what you're doing could improve care, but there are so many moving parts. Like, how do you actually prove that? How do you prove that you're improving patient outcomes? Because it's really hard.
Right, that's what. So it must be tough. I can imagine, like as a VC also, to be able to bet, because there are so many unknowns that could possibly all fall in the right place,
Yeah.
hopefully.
Yeah.
So my question as a follow-up would be like, what kind of market validation, or a minimum market validation that you would look at for a health startup that to be again investable or to count upon as a winner in their early cycle.
Yeah. So at the stage we're investing in, which is like very, very early stage, if you're selling into health systems, I think we want to see at least one health system like meaningfully engaged as like a design partner where they're like giving you some time from the clinicians, from like the head of whatever department you're selling into to give like meaningful feedback on the product and help you build a product that will eventually become a six-figure plus type contract with them. And so that's another piece of it too, is like, if everything goes well, what do we think the contract size will be? And is that big enough relative to what we think the sales cycles will be? And so trying to validate like, okay, if all of this works the way you think it's going to work and hope it's going to work, this is talking to the health system that's engaged, then like, what do you think the willingness to pay is going to be? And what do you think this contract size can become over time? Because that, we see a lot of health tech companies that are selling to health systems and, maybe the end contract is only like 50K or 60K a year. And we just don't think that's big enough to justify how hard the sales cycles are with health systems to build a really big venture scale business. And so we would need to see a clear path to like 200, 250K plus type contracts, or it just is going to be hard to see it working at scale. But that's a lot of what we do if it's on the health system side. If you're selling into, employers, because as a benefit of self-insured employers, some of what we'll want to see is just, do you have any employers on board or any brokers who are willing to be distributors of this because they think it's additive for their customers? And then have you had anyone beta tested and what has the engagement been with employees? Because again, is it actually like being utilized as a benefit? And then are you realizing the benefits? So like some early signals around engagement and like efficacy of the thing you're trying to do to help that self-insured employer reduce their costs. And how hard will that be to prove over time? So yeah, again, like looking for some sort of meaningful engagement from either a broker who's going to distribute it or a self-insured employer who thinks it could have a material impact, and then some early signs of that like engagement at the employee level. Those are, and then obviously we look at stuff around you're selling to payers. It's similar to health system, like they're just not a ton of payers, so and the contract sizes need to be big, and hopefully you have at least one kind of engaged as a design partner. If it's more the private practices, we want to see that you did a ton of customer validation and talk to a lot of private practices, and then there's clear kind of on fire problem that they want to solve. It can't be like a nice to have. And so, making sure they've really fleshed that out through the customer discovery and have like a bit of a pipeline of private practices that they've talked to that are interested in what they're building.
Right, right. No, all well said. I think all great points. So a follow-up to that, Mike, would be like again, because you are someone who is seeing like great companies on a daily basis. So any to be able to solve this puzzle, any smart moves or any smarter ways you have seen companies do, or any particular company has done, and you just felt, oh, this was really a better way than what most people think. So any hacks or any smart moves that you have seen from companies to be, especially during that early existential period that, a lot of things have to fall in place.
Yeah. So one of the this is just going back to health systems, which I know is just like one customer segment within healthcare, but I've seen an increasing trend of health systems when they take the risk of engaging with super early stage founders, trying to get warrants or other things to like get some upside for the risk they're taking of engaging with that early stage company. And uh, I think that's generally okay, but I think some health tech founders have been able to navigate negotiating those warrants being not just tied to that customer or that like getting data from that health system, but also saying like, hey, can you also make introductions to other health systems in order to earn the warrant? Because all the innovation teams and department heads at all these health systems, like a lot of them know each other. They meet at conferences, they talk about stuff. And so I think if you can build trust with one, it reduces the friction in getting the next five. And so I think trying to figure out if you can negotiate, when a health system inevitably wants to come in and ask for warrants or some equity or some like future right to invest at some capped price or whatever they're asking for, it's different for every health system, is trying to build in some distribution and introductions as part of that, and make sure that's like a clear ask and that they're willing to do that. I think that's been like a bit of a hack, because the reality is like it's just a grind to get your first like 2, 3, 4 health systems on. It can snowball after that once you build trust with multiple, but like you need to do everything you can just to get those first few in and like build trust and show that it works.
As this is
So yeah, so I think that's
harder
one.
than the 10, and 10 is harder than the 100.
Yeah, I mean it's never easy, but it becomes easier the more you build like a little mini brand and build trust within other health systems. But man, getting those first few health systems over the goal line is hard, really hard.
Right. So, see, one thing we've seen historically is, there's a lot of technology disruption, or more acceptance, rather, I would say, happening when there's a push from legislation, or there's something from CMS, or, there is any big change happening at the top. So, are there any, like such changes or such rules or regulations that are viewers should be aware about, that like through your research you have seen that that's one big trend that could be happening?
Yeah, um I don't know any right now. I'm sure there's stuff all the time, so I'd have to go back and kind of look through it. I think there are, depending on what happens with this presidential election, I think there's like risk around the flexibility around telehealth and some, I think things could change a bit depending on who's in office there. So I tend to think like there will be a lot of changes depending on what happens with the presidential election. And so as you pointed out, like with any regulatory change creates opportunity. And so I think we'll watch it closely and see, but I'm sure there will be a bunch of things that can create opportunities for startups.
Great. And one last question is, any company that is looking to, get themselves in front of you, what would be the best channel?
Yeah, they can send an email. I'm just Mike at forumvc.com. They can submit on our website, just on the Pitch Us form. Those are probably the two easiest ways. The Pitch Us form is probably, I get a lot of emails, but but I try to respond to everyone from a founder. So yeah, those are probably the easiest ways to get in touch with us.
Great. Thank you, Mike. Super awesome. Thank you for all the great thoughts shared. And I believe that it would be super helpful for our viewers, and they can definitely take few of these ideas, apply them, and build better health. Thank you so much.
Great. Yeah, thanks for having me. I really appreciate it.
Thank you for joining us on the Health Tech with Purpose podcast. Before you leave, make sure to like and subscribe on Spotify, Apple, and YouTube. And if you would like to see someone on this podcast, do refer to us. My contact details are in the description. Before I leave, I wish you stay healthy, stay curious, and keep building.